Hello, everyone, and welcome to 2026. This is CB3 Financials Weekly Podcast. Today, three headlines setting the stage for 2026. The roadmap to 2026, the faces and forces that will shape the outcome of the year ahead. Who will be the Fed chairman in May, and will they be a rubber stamp for Donald Trump's interest rate desires? And will we see a fourth consecutive year of double-digit growth in the stock market in the midterm election? CB3's weekly podcast starts now. Hello, everyone, and Happy New Year. Again, it's going to be a great year, in my opinion, for several reasons. We're going to cover that in this program. Hope you had a wonderful holiday season. So, as we kick off the year, let's talk about the landscape in front of us. So the S&P just wrapped up a really good 16% year, marking the third consecutive year of double-digit gains. The Dow added 13%, the Nasdaq 20% on the continued strength, of course, of AI and big tech. But what does this mean for the new year? Well, first, the political landscape. So I would have had a different show if I'd recorded this 2 days ago. But the reality is that the Maduro capture eases some tensions in the crude oil market, which is the biggest commodity in the world. So that is a plus. And I'm not seeing anything as I recorded this on Sunday night that's negative in the markets. So I think the markets in general are favoring this. So President Trump, firmly now in his second term, and his administration's policies on tariffs, deregulation, tax cuts, and spending are at front and center. The One Big Beautiful Bill Act is expected to add nearly a full percentage to GDP, and this is really important. So if we were expecting 3.2 before the bill was signed July 4th of last year, that could be 4.2, which is an extraordinary growth rate for this year. But obviously, tariffs remain the uncertain wild card. And we saw that just last week when the furniture tariff delays sparked many rallies in home goods stocks. Second, artificial intelligence, AI, remains the defining investment theme. The Mag 7 stocks drove much of 2025 gains, but in that specific case, Google and NVIDIA drove most of it. So only two of the Mag 7 really contributed and beat substantially the market, while the other five just kind of meandered. And those are still seven stocks that are bigger and more bullying, if you will, in the S&P 500. The S&P 493, if you will, did not do anything very impressive. So third, international markets really stole the show in 2025. We had some international market exposure early in the year, but not much later in the year, because we did not anticipate the dollar weakness that we saw. We obviously made up for that in other areas, but still, that's something to be watching for this year ahead. Will the dollar continue to weaken as interest rates cut? And finally, gold and silver posted their best year since 1979. Again, we did have gold and silver earlier this year and then lightened on that because, frankly, it just really looked overbought. So that's the decision we made there. We'll reevaluate that as the year continues, having some gold or silver in CG and DS. Certainly, we will not have it in GI. Well, I don't know. We might. I'm changing my mind here right in the middle of the podcast. We did have gold in GI for a while. It's really volatile. We'll make that decision as the market moves forward in 2026. Now to the Federal Reserve, and this may be the single most consequential decision of 2026. Jerome Powell's term ends as the Fed chair on May 15th. Trump has promised to announce his pick very soon this month. Four names have emerged. You know some of them, but it really doesn't matter until it gets to the final two. So the critical question is, will the new chair be independent or a rubber stamp for the president's interest rate desires? Trump has made it crystal clear. He has stated on Truth Social, anybody that disagrees with me will never be Fed chairman. He wants lower rates, and he wants them now. Actually, he wanted them last year. He probably even wanted them 2 years ago. The president has called Powell too late, a fool, and even threatened legal action over the Fed's headquarters renovation project. Well, here's the reality, folks. The Fed has cut rates 3 times since September. Okay, that's pretty fast, bringing the Fed funds rate down to a range of 3.5 at 3.75. But with core inflation still running above the 2% target, the GDP growth clocking in at a robust 4.3, so it's not like we're getting hurt with GDP. The case for aggressive rate cuts is far from settled. The Fed's December meeting minutes, released just last week, showed divisions within the committee. Many officials believe it could be some time before there's another cut. So we just have to wait and see, folks. There's nothing else that we can do. We are still fully positioned in all of our programs for growth in first quarter 2026. And so now the big question, can we see a fourth consecutive year of double-digit gains in the midterm election year? Let's look at history. The S&P gained 23% in 2023, 25% in 2024, and 16% last year. That's the first three-peat of double-digit years since the late 1990s tech boom. And we know what happened then. But 2026 is a midterm election year, and historically, that's been the weakest year of a presidential cycle. And that is true, not by much. Usually the first and second year are almost the same as weak. But since 1950, the S&P 500 has only averaged a 0.3% return in the 12 months leading up to the midterm elections. So intra-year drawdowns have averaged 17.5%. Now that's bigger than we had at any time last year, except for those few days in April where the market barely touched on a bear market. I think it was 20.4% for just one day. All five previous two-term presidents oversaw double-digit gains in their sixth year. But of course, this is not a consecutive two-term presidency, only the second one in history. And this set of rules is going to be different for Trump. So what does this mean? Conflicting signals is what it means. Midterm years bring volatility, but second-term presidents in year 6 have historically seen strong market performance. But again, this isn't really year 6, it's year 2, because Joe Biden was president in between Donald Trump's two terms. Wall Street strategists are cautiously optimistic. The people that we're following, we don't see a single one who is predicting a negative return for this year. So expect a first half pullback. That's typical, usually not in January, but it can happen, often in February and March. Perhaps the second and third quarters, it could happen as well. August and July, sometimes September, are weak months. But my takeaway for you, don't panic at the inevitable volatility. This is one of the reasons that we moved all of our clients to Charles Schwab, because we can now implement block options hedging for all of your portfolios. And those clients who have followed how this has worked are enjoying the benefits of that. If you want more information, go back and listen to my previous shows where I go into great detail on CB3 Live episodes about how this works. So we're going to stay diversified. We're going to remember that the midterm elections have never ended lower 12 months after hitting their low. Not once. Not once, okay? So there you have it. 2026 is shaping up to be a year of faces and forces, and that's our theme for Thursday night's show. You do not want to miss this. The 2026 roadmap, the 12 faces that are changing the country and the world for the market's sake in 2026. Now, they're not specifically doing it for the market's sake, but I think that they're the ones who are going to influence the returns on the market. And of those 12 names, you can go to the website and see them in order on the website on our thumbnail, and you can probably figure out who's number one. Some of the others will surprise you, but you really need to be tuned in for this and have questions on hand, because I will be ready to answer them. So while the roadmap is uncertain, the historical patterns suggest opportunity continues to exist for us and our investors, even amidst volatility. All right, I'll see you Thursday night for CB3 Live. Thanks for tuning in. We'll see you next time, and see you Thursday night at 7 o'clock Central for CB3 Live. Have a great day, folks. Thanks for listening.